Yeah, welcome. That's the first day, and want to say hello to our new members of our mentoring group as well. Then later, this video then will be available also for all of our free members. And so this is the recap of today's Bund session. It is Tuesday, the 3rd of September. Do remember that we will have the expiration day. I have to look for this. What is it called? Oh yeah, expiration. Of course, the English word is expiration of Bund this week. I think on Friday. Yeah, Friday. Expiration of the September contract. All right. That means that we then can roll to the next quarterly contract, and this is December. Wow, already the December contract in Bund. How time flies. Anyway, we will look first for the recap what I have provided and what you guys then also in the member group will learn over time. This is to make your big picture preparation. This is then something we will speak and learn in our module number 2 or 3, I think. But it's definitely not a module 1 thing, because number 1 module is in our mentoring will be that we talk first about the understanding and learning the market, the fundamentals of the market, the contract specifications also a little bit, so that you at least know how the future is built and how every future works, especially the Bund in this case here. So big picture preparation will then be a part later when you have the knowledge to first understand market. And when you then know the technique of measuring the market behaviors, the bias, that means we use volume profile, market profile, the auction theory and order flow, then when you get everything, the fundamentals and basics, then we can start, of course, with the big picture preparation. This will be then the first moment where you can try to see how good are you. How good are you in terms of how you understand the market? This is one of the not so heavy things you have to learn in trading. I think this everybody still can do to learn these instruments of volume profile, market profile, auction theory. And then starting your big picture preparation is something you can learn then within a few months. And you will then notice that you get better and better and understand the importance of certain level and marks. For today, let's talk Bund. My hypo number 1 was I saw range long levels with the pre-market around 8 o'clock, 15:20 with 178.99 and also in general the area of yesterday value area high. My hypo 2 was a short trade only if we really see increasing sell volume into the 178.94 area. So that means taking out this 94 and then weak pullback holding, then we go sell with targets 88, 82. And if sell volume holds on, may even targets can be reached 178.77 plus. We know that this is against the long-term trend, but overall we are in the top area in the long-term in a range market now for 3 days. So against the long-term trend, but still possible ticks to mate here. And hypo 3 is then long if increasing buy volume into the higher pre-market volume edge. This hasn't changed. It was at 8.22 and also later than 8.30, around 8.35, the 179.06. That means I was feeling quite sure about that this is a very important level, because this is just a level where we have this big distribution edge from the yesterday value. You see this is the most upper distribution edge from the weekly profile, so that means from yesterday and so far also the level where the last week's profile had its biggest main distribution. That means this would be a possible situation if we can re-enter this 179.06 area. We have first the possibility to see targets within the range, within the value. So that means POC 12, and then the week high 20. And then if we see still increasing volume, even above the 20, target would be 26, and then even a plus trade chance. That means so also more a home run if you have a third position, even for home run chance. That means we don't know if this can become a home run, but you have a cheap entry today. Again, you have a cheap entry possibility here. Then we really see that they want to re-enter this main bigger distribution here from last week's profile, that you're entering here cheap. And so let's see what happens. If they really stay strong at the 20 or even 20 and then even 26 level at the top, they may take out the all-time high, and we have just a chance. And we are cheap in this trade, and just let the market tell us if we stay with this trade or not. So this is the three hypos. And let's talk now what happened and how the market developed. You see, this is the pre-market with this higher volume edge at the 5-6 area. That hasn't changed, because after 820 you see market just pulled back. So see no hypo one trade so far. This is, by the way, still pre-market action, but we just talk it like it would be at cash market, because we want to see how my hypos work. That means my hypo needs to be proven that these levels are of interest, or if they're not of interest, how they then react when coming back to it or getting even below into the short level, in the short trade level. Short trade level, remember, was below this volume edge, below the 94. So what happens here? We see, I want to show you also what can you do, because when you're waiting here for a long, the thing is always the trading gurus and entertainment guys on YouTube may show you all their trades that worked very good or show you the trades of what they said, what can happen, and then they show you what there is happen. And a real trader will also show you that at the end, your P&L after a week or a month will also, and of course, be built of the trade that didn't work and how you handled it. Because think of it, if you're waiting for a good trade and you're using my hypos, or you're doing your own big picture preparation and say, okay, every time we see this level, I want to go for the hypo one. Anton told me this is a good situation. We want to see then the triggers, and then we go for a trade. So let's keep this up, this information, because this is very important. Think of it. If my plays don't work, and if I tell you bullshit because I'm an entertainment, if I would be an entertainment YouTube guru guy, then you would see maybe you need to check these guys and say, okay, every time when we hit this level, did you enter like 5 times this trade and got stopped out? So you made 5 times 4 ticks minus. So that means you have 20 ticks minus now, because you need to prove this if this guy is talking bullshit. Because anyway, if he shows you the only trade he made, and this was a 15 tick plus trade, which looks very good, he may hide what happened before. So he may hide that this play is maybe not working, because you would have made already 4 or 5 trades before that gave you 20 ticks minus. And then he just show you that, see, at this time when they hit the level, you made 15 ticks plus. So of course this would be bullshit, then this is a lie. So that's why I mean we need to talk very deep into the topic. Of course, this takes more time, but this is very important for you as a developing trader. So let's see what's happening. Then when I'm talking of my hypo one, and I say I always go for the double rejection before I get into a long from a range long level. I want to see responsive buying at least 2 times in the delta confirmed me that there's real either absorption or people buying at this level before I get into a trade. You can prove me when I do this, because with every live session you can see that I talk this through the trade and tell you live why I do enter here and why I don't enter, and why this is just part of my play. And of course, you don't have to go with this play. I want you to develop your own play, but I want to see you how important it is to, at the beginning, even later when you're professional, to use only less triggers, and because your brain cannot work with more information at once. So let's see this. Why this was no trade? I write down here no hypo one. So every time when you see a preparation or a trading debriefing, ask this mentor or ask this guy, okay, very good, but why is this no trade? Everybody can tell you this is no trade. I can tell you because I show it every time. So look at the situation. We hit, at this moment, we hit this area here at 8 o'clock 23. First time we hit this 99 area where I said I want to see range long levels, responsive buying. So what happens? You see increasing sell volume at the low. That means we have no responsive buying because as we hit the 99, we see an increase of sell volume compared to the selling in this move starting here at this area here. You see this is the one of the biggest selling candles here in delta compared to the others. This is as big as maybe this or this. This was when we're reaching overnight low, for example. Of course, this is when people then take profits. This is also a big, but see, this is really big. So first I would be skeptical. I want to see double rejection. So tell me, do you see double rejection in the delta? No, you see one, and then when they go to the downside again, boom, 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 more. It's small, I agree, it's small, but you see no more responsive buying. See the difference here. When we hit the low first time, this means we coming from the from the overnight where we saw some accumulation. This was in the very, very morning between 7 o'clock and 8. See what this looks like when we have a responsive buying. We're hitting it with some very big sell volume again, like here, and now we want to see this green. Boom, 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 boom. So that means, all right, it's okay. We hit this area and people, anyway, we don't know the reason, say, okay, no, I leave this short. Boom, boom, boom. They close the short. You see this in the delta. And even then, only a weak back test also happening here at the low. Boom. And again, second, two buying, responsive buying. So you could have entered as you see this delta second time. This is my play, for example, when, if this is in my big picture version, a relevant level, which wasn't at this very moment, but no matter. We just play it the way now, imagine this would be one. Then this would be a responsive buying situation where you see, okay, I see number one, number two, you could have entered cheap around the 96 area, maybe 97, and now my target in the scalping sector would be here the high. Anyway, I just want to show you reasonable why this is no hyper one trade. And this is very cool. When you start reading order flow, reading the triggers delta, you can also in an illiquid market then like DAX, you also need then DOM and the tape. And in the Bund, because it's so liquid, you normally don't even read to look also at the tape, but you only, it's okay if you look just delta. And I also have here the ask bit volume difference. This is the same like delta, but not build on it and build a chart. But it's basically the same. Alright, so see this. This is then no trade because we have no double rejection responsive buying sides. Boom, 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 boom. Price get lower. And now again, no hypo number 2 trade. Short because we don't see increasing sell volume taken out the low. You see 94 is not taken out. People sell into this level, you see this here at this very moment, but we don't take out at least 2 ticks. I want to see always taken out for me is not only a 1 tick in Bund, 2 ticks. 2 ticks taken out the low here is not taking place. But you see, when they're testing the low, it has no effect on price. See this? We stay at this level 94, which we were already 2 minutes before. That means this got absorbed and now they get out of a short, switching to active buying again. So that means we have no hypo 1 because we got triggers. This means at this very moment you don't lose any money. This is very important because when you read, why would you read delta and order flow and your order book and implement this on your micro level? Imagine, why do we do this? Because this gives us a additional advantage statistically to not only get good trades but also avoid. Market gives you the chance when you're good in this and are skilled to avoid also trades. I will tell you. You will not avoid every trade, but when you handle, and let's say you take 10 trades in a certain period. And then with this, when you're getting good in this technique, you maybe made still 2 or 3 trades where market just give you the sign, or it gives you failure information, or it looks like everything would be responsive buying, you buy, and then you got stopped out. Yeah, that's it. Sometimes this is happening. But I can tell you, in the majority, you will avoid at least a few trades that makes your statistical P&L at the end looking worse. And you also will be very good, looking very close and getting better to then take the trades that are really having good, let's call them pre-signs, like bias marker, where you can then build your confidence on the micro level. And the biggest advantage for you will be that you're good in your big picture preparation, because this is where the music plays then at this certain prepared level, where the plays make sense and have a higher probability to work out. This is very important, because if you don't know the levels where you have to watch, like activity zones, when you watch these behaviors outside the activity levels, I can tell you it is worthless, because market will always give you some look-alike trigger visualizations, but they don't make sense at this certain levels. You will understand when you learn how to do big picture preparation, but this is one very important thing. So no hypo trade, no wasting money here, because it wasn't worth to take on the risk here. For my hyper one, as we see, no responsive buying, but initiative to get up again and test maybe the low. What they did then, nobody knows if it's going at this moment, if it's going lower or lower. Nobody tells you, I don't tell you, now this is then a sign to get into a short. No, but look at my hypos, this was also no short levels. What does it mean then? You stay flat. You're not getting paid to click on your mouse and make trades and trades and trades. You get paid because you have a good statistical understanding and have your mindset in control to participate now from this. Everything is okay. So let's see what happened now. As we now hit the target area, where we want to look then at the 06 for a long, look what is happening. Boom! Increasive buying volume. And the next candle, look here. A weak pullback, that means no big selling rejection. This is a trigger now, because certain mark, look at my big picture preparation. It makes sense, it is the volume edge, it is re-entering the old area. It is definitely big buy volume, and we have a weak pullback at an important level. So this is the moment where you execute this play. You don't have to. I have to, because this is my play and it is on my big picture preparation. You don't have to play this, because a play always has to fit to your character, as also the market has to fit to you. Maybe you're totally annoyed from the Bund and you want to go to another market. I would be totally annoyed after years with the DAX, because this doesn't fit to my character. This higher volatility, a little bit more feeling uncertainty got triggered in my emotions. I know that I'm not willing to handle this, but I know in Bund, these feelings are not so hard triggered, and I can work with this, at least then still existing triggered emotions, and can work with them and getting better, because I know that this is an old behavioral pattern. So anyway, this is now my job to enter this trade, because everything is fulfilled. Rule number 1, big picture preparation, important mark. Rule number 2, very strong buy volume and only weak pullback. That means this is a weak pullback. It's not a big boom red candle in delta. That means already people who got in, boom, 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 closing, or off, or got confronted by big selling rejection. So this is important to see. So now you enter, and what is happening? You're in this trade, and you see target number 1 is for your first. If you're handling maybe 3, we always make the example with 3 lots. Because 3 lots, now no matter if it's a 1 contract per lot or not, doesn't matter now. We just play it now always and learning. We do this like with 3 contracts. And we know our target 1 is here with the long, the 179.12. Target 2 is 20, and target 3 is, if we even get above the 20, we can expect, and watching closely what they do at the 26, because it could be even a plus trade. So that means we watch closely. Do we still see, when we hit these areas of 20, 24, 26, do we see still increasing buying volume? Then you don't even have to take out your contract now number 3 that is left, okay? And you can hold on to this contract, because this is then your home run. So this is my kind of technique. I would play this. You don't have to. And maybe you have a better statistical edge and say, no, this is different. Everything is okay. This is just now at the moment what I testing. So look at this. We're reaching target number 1, the 12 area. You still see at this level they take some profits, but you also see price cannot go below this 08, 09 level. They rebuy. You see this also in delta. Boom. Next wave into this. We're reaching target number 2, level 20. Then finally we see the open phase. A little bit more, of course, volatility, but you see higher high, higher lows. We reaching during the open, you see this, the phase of even target number 3 area, which would be either now the target number 3 area, which we take our last third home run only if we see that they have a behavior like they cannot hold on to this micro scheme, higher low, higher short, higher low, higher short. But they did. That means open range, pulling back, some selling, boom. And you see this behavior. When selling one day at the very moment where it's not the last low, for example, is taken out, switches back before to market buying, what obviously happening here, see this? Here. You know, we have back initiative. And you see initiative holds on. Testing again, the volume edge. See? Absorb. Boom, switching again. The behavior is still the same. Higher high. You see this? Your home run trade would be now about 60 ticks in plus. See this? Absorption, because low is not getting lower. Testing, see this here? Delta, buying, also taking profits, selling, getting up, a little balanced consolidation. And now when they get to the low, selling. But you see no effect on price. 52 stays. What does it mean? It means that it get absorbed. You could also watch this behavior in the footprint if you want to get even closer to the material. And you see then in footprint, this is the pullback. People sell into it. And now you see they already provide, this is the recent order book at this time. This green rectangle means that we have significant higher amount of contracts provided here in the bid than at the rest of the book. In this term, it is about 500, 600 contracts. And you see, selling into it, absorbed. Selling, 53 absorb. Selling, 53 absorb, 52 absorb. And now, sellers stop. And what they do is, you see, stop. And people, boom, switching back to active buying. When you see this kind of behavior and you're waiting now for the kind of re-long, waiting for a re-enter a long trend trade, this is then the opportunity, boom, where you're trying to get in very quick and fast. Because then you can be in this trade before reaching the top area. It's on the, I agree, this is close to the top, but you then have to watch closely if there is still enough buying power that they even get higher and higher. And think of it, obviously, this you should have done before in these moments. Why? You should have done the same thinking like in this moment, because here the trend is still young. Here we already made 60 points. So you can go with this technique, like boom, now I enter here at 56. But you have to be aware now, when they're hitting, the next time when they pull back, you don't want to see this, boom, 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 stay in control. You have to be very careful watching now and take your profits, because the trend is already at an advanced level. Do you understand? Then you have to take your profit quick, because this techniques, even though it worked, so remember, we got in at 56, 57, recognizing they're switching for absorption again to market buying. Boom, 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 boom. You make almost 6 ticks, 10 ticks. And now you understand, when you finally now, yet not before, but now starting here to get into this trend, it's an already advanced trend that already made 60 ticks. Be aware now to secure your profits quick as soon as you see changing in behavior. That means that now tape's getting red and they really cannot hold on to the absorption level. And this happened, for example, at this moment. And this is now the difference. And we're watching the footprint again to show you the difference. Here you see, this was the moment where you see absorption, boom, 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 absorption, boom, 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 absorption, liquidity provided, boom, switching to market, quick. Get into the trade. 56, you see already here, buying. Okay, you get at 55. Boom, 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 boom. You make 10 ticks. Now you see everything's very good, very good. Now same behavior, pulling back. Absorption so far. Boom, boom. Absorption. Liquidity is already pulled out. See this? Bit liquidity is pulled out. No more liquidity. Still selling. Yet absorption holds. A little bit is still here. Absorption holds. People try to buy, but follow up. Selling. Absorption. First time didn't hold anymore. They hit the bid, and we get at least down to the 59. Boom! Now would cancel this trade, because at this very moment, an advanced trend trade, we will get into the consolidation phase now, and it is already about 10 o'clock. We made wonderful 60 ticks. This is not the moment where you then want to go here for a continuation of this long trend, because what do we normally accept after we see an imbalance phase? Yeah, you're right. We will get to a little bit balance, and we may maybe build some value and stay up in this area within, and then maybe new market information coming in, and we will see if the value, if in option theory we got new information and they get in both directions. Either trend is over and they're going back to the value, or as it is a good trend, they may also then continue with more information. But at this very moment, this is nothing more to do then. And you see, at this moment, the volume profile was looking, I will draw it live here, so you see it, what a trader was confronted at this moment. You see, they couldn't hold on like they did here when we saw absorption, switching back to market, but you see here, okay, absorption. Do you see anybody switching here back like here, back to the market buying? No. Selling continue. Till here they absorbed. But here you also see the foresign of they cannot hold on, and we take out the low of the structure. So we knew now there's still another big bullish control level, and this is this level here. See this also here in the volume profile. That means this is the value now is built. You see value followed price, also a very significant thing comparing to yesterday, where you see this confirms a strong trend. But see, we can watch now, if you're now going into, hello, I'm a range trader, that's the moment of the day I am interested in, because I don't want to trade the trend. I don't tell that this makes sense, but maybe you do. Then you have to wait and say, okay, now I want to see how do they behave. Do I get responsive buying signs at this level? Because I know this is now the volume edge. If this is now becoming a balanced phase, and we already see here, this was the last bull control level of the trade. So it's okay to take out the little smaller LVN and fill it out maybe and repair it. We will see what is happening. We see boom, bah, big selling into this level, but now, all right, already some people starting to buy again. See this in footprint. Boom, 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 but poof, buying and liquidity pillow here. All right, no worse for a trade yet, but let's wait. If we see maybe a double check of the downside and we get double rejection. No. Oh, yes, look and see, delta divergence means now second test of this level. It's already one time halfway confirmed. I want to see now same signs. I want to see when they put here no more increasing selling. That means first people who are in this long or took out want to see now confirmation. And what do you see? We testing this area, testing it, okay, pushing a little bit. A buyer, again, buying. So you can enter now at this area very cheap and say, scalping is now going on. That means we have a very tight consolidation, B model at the top. They couldn't hold onto it. Of course, now it is looking this way. That means if you're entering now here at this level, recognizing there's buyer coming in again, still a little delta divergence, you can say now, okay, I entered this trade here, and now I only take profit very quick, because when we're reaching the volume edge 55, 56 area, will take my profit. So you can trade this and you get your profit. You get it. And now you wait for another situation. If they're coming back, you wait for the same behavior. Seeing they're coming back to this area, if you see a delta, if you see double rejection, you can go on for this trend again. They haven't entered this area yet. Now they are back. Now you see we weaken a little bit. Double rejection signs, yeah, but it's very tight now. So not worse for a trade, but at least you see no more initiative selling at the lows as it was the first time when they tested it, of course, is their absorption. So this is maybe then one chance was at this moment to get into this trade here, to see when they 2 times reject this area and you have, okay, I get in. This was then maybe a a situation where one could have traded this scalping from the now at the moment range market. So, and here again, you see this, they testing the low, you see buyers coming back, buyers. So double rejection, you enter here and your target is, you know, of course, very close. So that means 55, 56. And you get your target again. See this? Double rejection, testing, buying, testing again, buying, double rejection, entering, target. Works out. It works out, but because this is an important level now. And we are now in the consolidation phase. And if we scroll now, it's the end of the session, 12 o'clock. We still are in a balanced market. So this was the very detailed, again, explanation of today's Bund. I hope you can take something. Happy learning. This is Anton Höpfel for Manapa. And I'm sure in the mentoring group we will talk about this many, many times in different situations. How to get better and put everything together and see it in context. Thank you for watching. Anton Höpfel for Manapa.